From R.D. Smothers Wealth Management, this is The Retirement.
When you retire, if you want an exciting life, you need a boring investment strategy.
Matters.
If you enter into retirement without a plan for income, you're not retired, you're simply unemployed.
Podcast.
Hey, this is your host, Dale Smothers, and you're listening to the Retirement Matters Podcast. My hope is that you will find the information you need in every single show on how to do one of the three things: either saving more money more efficiently, planning better for your future where you can live in retirement worry-free, or my favorite, how you can live a happy and fulfilled life in this life you have been given. We know that your time is valuable and we appreciate you spending it listening to this episode of the Retirement Matters Podcast. On this episode of the Retirement Matters Podcast, you are going to hear some of the clips that you will likely see on our YouTube page or maybe even hear on our podcast as standalone clips, but we put a little bit of color commentary around them. These are recent clips that we did on the national news cycle that we just gotten back from at the recording of this particular radio show, where we talked about having discipline in this stock market. And what I do on the national front with national TV outlets, with Fox Business, CNBC, Yahoo Finance, Bloomberg, Schwab TV, NYSE TV, FinTech, whatever it may be, wherever I'm at, I am talking to a national audience. But when I get on these radio shows, I'm talking to individuals who are close to retirement. And this is why we bring these specific clips, because it's more about how much money you get to keep than it is about how much money you make in retirement. Losses hurt you more than gains help you. You hear us talk about these philosophies all the time on this podcast. And my goal was to bring some clips, some good information to you, the listener, on what you need to be doing inside of your own portfolio and why you should not leave your portfolio to chance, hoping that the entire market continues to climb higher with very little volatility. It's very unlikely to be the case over the coming couple of years. So without a long, drawn-out intro, I just want to tell you we are very happy that you are here, and if we can provide any assistance to you on your own retirement journey, our team is on standby. 270-600-PLAN, or navigate to our website, rdswealth.com, and we'll be happy to help build the retirement you've always imagined. Enjoy the show. Good morning to you. I hope you're doing well and you're ready to start discussing all things retirement matters. On today's episode, you're going to hear our message to investors that we are delivering on a national platform. We have to be able to maintain discipline in this market. I'm going to bring a few clips of some of the news interviews that I did while I was there on the New York Stock Exchange floor. We go regularly to the New York Stock Exchange. And one of the things that I love about doing that is not only do we get to bring our message to the national publications all over the world, but we get to take a lot of information in. While I'm there on the New York Stock Exchange floor, I'm constantly talking to traders, listening to what's hot and what's not, what's trending in one direction or the other. And this gives us a lot of good insider insight on what perhaps we should be putting our clients' money into. This type of knowledge we get to then bring back to the community that we serve here. Now, we have clients all over the nation for sure, but predominantly where home is here. Central Kentucky, South Central Kentucky to be specific, North Central Tennessee. We serve this area very well, and we do this with a lot of good knowledge that we bring back from understanding the market in a very unique way. Along that journey, we also get to share our own insights and our own philosophies on how to invest. And today, my objective is to help you understand why discipline's going to matter over the next 3 to 6 months, perhaps more than it ever has since you have been invested in the market. There's going to be volatility. There are going to be scary headlines, no doubt. There's going to be elections. There are going to be geopolitical events. And over the next couple of years, if you are close to retirement, you cannot allow your portfolio to be derailed simply because of a pullback. There's so many positives that we have pushing us higher in the market right now. it's still important to know that dips do come. And when they come, you've got to know how your portfolio is going to behave. And what you do in those moments is likely to shape years to come. You are in an opportunity of a lifetime right now to make money. We love helping our clients make that money. But in retirement, it's not about how much money you make. It's about how much money you get to keep. And that is one of the things that we help clients do each and every day. And based on our track record, a lot of these national TV hosts are asking me, what stocks are you buying? How are you helping your clients make money? And one of the things that sets us apart on these stations is that we discuss all the time about how in retirement income phase, losses hurt you more than gains help you. And it's important that you know what your portfolio will do if and when the market takes a dip. And because these dips are more and more frequent, more and more severe, constant headlines telling you that this is the big one, you cannot find yourself selling out at the bottom. You've got to make sure that you're taking advantage of these market returns that we're seeing right now, but not overextending yourself to unnecessary risk. And we discussed this many times this past week, and everyone that we talked with on the floor shares very similar sentiment. The idea that the market is booming right now, but at some point in time, if the music stops, things could go the opposite direction. This doesn't mean you have to not participate. One of the clips I'm going to show you is me and Charles Payne on Fox Business, and we were discussing this specifically. Discipline right now sounds like an ugly word because a lot of times people associate discipline with sitting on the sidelines, and that's just not the case. To be disciplined means you know what you own, you know why you need to own it, you know how long you need to own it, and then from there, you know how to generate the income that you need from what you own. And this is exactly what we do for clients every day because it's impossible to do this and still be able to go out and enjoy and live life if you're in retirement without spending a lot of time and energy on this. This is what we do every day. At RDS Wealth, we help clients do this exactly. We help with Social Security decisions. We help with tax decisions. We help with Medicare decisions. And one of the things we do very well is we help with investment decisions, specifically building that plan for you and your own unique situation. We pride ourselves on this, and it's not just a cookie-cutter approach. This is one of the things that differentiates us, and we love being able to bring our message to the national conversation. Sometimes we help make news. And so all of this is just a piece of what we've done over the week. And I just want to share with you some of the things that I think you would need to know if you are close to retirement. This is what this show is built for. With that being said, let's get to the pause for positivity. And I'm going to tell you, this pause for positivity really wasn't anywhere on my radar until I was on my way back, sitting in the airport early morning on Thursday and eating breakfast. Right beside of me, this restaurant was fairly full. There was a young lady on a laptop, and she had just ordered some coffee. She leaned over and asked Whitney and I, we were sitting at one table, she asked if she could borrow some sugar off of our table because her table had none. And I made a funny little comment, said something like the modern day equivalent of borrowing a cup of sugar from your neighbor. And she laughed. And within just a few seconds, she had closed her laptop completely, and we began a conversation. And we began to talk about how much the world has changed. We heard that she has a sister. She's on her way back from New York City to North Carolina. She has a sister who has been diagnosed with cancer. They found it late in life. We had an opportunity to offer prayer for that situation. We had an opportunity to connect with this lady who seemed too busy, too closed off to the world, but one small little gesture, one small little comment got her talking. Come to find out, she had been working on that project she was working on since around 5 a.m. She works for a major investment bank in New York City, one that if I called the name, you would know exactly who I'm talking about. And this is a kind of a secretive project. She didn't know what we did until later in the conversation. And once she realized what I did and where I was from, she said, I could tell that you were different. You guys are just really nice. And the funny thing is, I've seen a lot of nice people in New York. I have met a lot of people that are willing to have conversations. It's just no one's willing to get them started. And this is where our pause for positivity comes from. And if I were to title this message, I had a pastor once when I was growing up that would always title his messages. And he would say, if I were to title this message, I would title this, "It's Always More Than Sugar." It's always more than sugar. What does that mean? To me, what that is telling us is there's always an opportunity to impact someone's life. There's always an opportunity to start a conversation, to learn something new about an individual, to change the world around you. In this one instance, just out of a small little gesture of asking to borrow sugar, I took that opportunity of interacting with a stranger to then just learn a little bit more about her. Now, granted, I didn't try to pry myself into her situation. She seemed very busy. She seemed like she was working. I just made a small little gesture. It got her laughing. And then, like I said, it just naturally flowed into a full-blown conversation to where for about 35 minutes, she sat with her laptop closed and we just had a cup of coffee and a conversation together, the three of us, myself, Whitney, and this young lady. And that was an incredible opportunity. She began to tell me about her husband, about her sister, about her family, about her growing up. And it was mostly all about her. It wasn't until the very end that she even knew what we did. And that's what it's all about. This is what we call at our firm the red car theory, the ability to look for those red cars and take those opportunities to impart a little bit of positivity into someone's life. Let's do that together this week. Pause for positivity this week. If I were to title it, it would be, "It's Always More Than Just Sugar." All right, there's our pause for positivity. Let's take a quick break. We're going to go to a break and we're going to reset. We're going to come back with a very important message for you as an investor in this current market. I'm going to share with you our message that we have been delivering all week long as we have contributed to this national investment conversation. Don't go anywhere. We're coming back with more Retirement Matters right after this.
Thank you for listening to Retirement Matters, presented by R.D. Smothers Wealth Management. If you'd like to speak with us, give us a call at 270-600-PLAN. And if you enjoy the information in this show and would like to hear more, you can access previous shows by searching for the Retirement Matters podcast on the podcast platform of your choice. We also produce a weekly newsletter. Receive it free to your email inbox by signing up online at rdswealth.com.
All right, welcome back to the show, and we're going to jump right in because as many of you may have already heard me talk about, and maybe if you're just tuning in, you haven't heard me, but briefly I'll mention, I have just gotten back from a New York trip this past week where we were contributing to the national discussion on investments and markets and interest rates and oil and the Middle Eastern crisis. At this time in New York, we typically go visit a lot of different news outlets, and I'm going to play for you a clip from my sit down with Mr. Charles Payne himself on Fox Business. And if you're not familiar with Charles Payne, he is a market analyst, if you will. He runs a research firm. He's also the host of Making Money with Charles Payne on Fox Business. It's a television show that airs every day at 2 o'clock. We got an opportunity to just chat for 5 or 10 minutes here on air, and I'm going to play for you a small piece of the clip. And if you're interested in hearing all of it or maybe hearing it again, go to our YouTube page, which is RDS Wealth Management. And that is where you can find all of the interviews that we did while we were there, including this one. And when we go to this clip, I want you to hear one thing. If you hear any of it, I want you to hear very closely what I'm saying about being disciplined in this market we find ourselves in. Let's go to this clip with Charles Payne.
All right, joining me now, RDS Wealth President and CEO Dale Smothers. I know you kind of felt that was for you right there, Dale. You've been killing it. But let's talk about this for a moment. Are you concerned? All these tentacles, you got NVIDIA in the middle, you've got Oracle, you've got OpenAI, you've got SoftBank, you've got smaller names. Some are saying this is a problem, this circular financing and all these things. You're not concerned about that?
Yeah, I'm not necessarily concerned. I think we have to be cautiously optimistic here, and we've got to pay attention because, as you've said, NVIDIA has clearly become a load-bearing wall for the overall sector, for sure, and even the major index in general. And the circular financing, I know if you look at it, it looks a lot like that Three Stooges skit where $10 is passing around from one person to the next and everybody appears richer. But the fundamentals are here, and as long as AI demand continues to climb higher, I think NVIDIA and the entire sector climbs higher.
All right, so here's the thing. NVIDIA earnings are coming out Wednesday, and the thing is, folks, earnings estimates continue to rise. I love this. Whenever I see a stock like this, they beat, and sequentially the numbers are going up. But here's the rub. The beats have been small. Single-digit beats, and we know that this stock hasn't reacted well to earnings. So there's a lot of pressure. We know they're going to do well, but how well do they have to do? Because right now, NVIDIA is pulling back a little bit.
Yeah, I think, just as we said, NVIDIA is kind of the center of it all, and all eyes will be on that when it reports on Wednesday. It's got to do better than just expected, I think, for this to boom out of proportion, perhaps more than we even imagine. But here's the thing. I think NVIDIA takes us higher throughout the course of the year.
Right.
No matter what happens in this earnings, stay the course. S&P 500 at 8,000 is certainly a possibility.
That's your target, yeah. So, and to your point, we've seen it react, pull back, and then regain its footing, and then continue to march higher. You've had a message for investors in general, right? About being cautious. Explain what you're trying to do here, because I feel like really now, I know we always want to be disciplined, but I feel like this window of opportunity may not never come around again. And so I'm like, go for it. But seems like you're saying be careful, though.
Sure. I think discipline is different than maybe sitting on the sidelines, for sure. Discipline is knowing where you need to be, Charles. If you are in your retirement journey and you're just a few years away, don't get chasing returns here. Don't get discouraged, perhaps, if you're not making 20%, 30% in your portfolio. Understanding where you need to be and maintaining that discipline, knowing this is an opportunity, taking advantage of that opportunity, but making sure you stick to your plan and not overexposed to risk.
All right, so let's bring up risk. Some of the risk you see right now in the market, geopolitical tensions, sticky inflation, domestic politics. I think you're referring to the midterm elections?
Midterm elections, yes. That's a history there for us. If we play midterm elections, we know volatility is probably coming in closer to the end of the year. This is why I think it's a bumpy road to 8,000 for the S&P.
Yeah, I know we've shown this table over and over again. Going into midterms, we're down. Coming out of them, typically the market makes a pretty good rebound. Geopolitical tensions are tough, right? We've had them over our head throughout this entire rally. In fact, the rally sort of began when the conflict in Iran began. So how does someone square all of that? Is there a point where we no longer could ignore that?
Yeah, artificial intelligence clearly pulled us out of this geopolitical tension that we saw. And it's funny because what was once being punished at the end of 2025, AI CapEx spending, is now being rewarded. But I think geopolitical events that are coming could make sticky inflation, and sticky inflation doesn't help the market, for sure.
Let's talk about the areas that you like, this technology renaissance. On the semiconductors, NVIDIA, Micron, cloud, Amazon, Google, Microsoft. I'm going to ask you a little bit about the infrastructure. Nebius, I hit a lot last week. They're pulling back a little bit. There was a piece out on CoreWeave about the insider selling. Like, they're dumping a lot of stock. And I think even early this morning when all these names are up, that was in the red. How concerning is something like that for you?
I saw that. We've been a holder of CoreWeave essentially since its IPO, believe that name has a lot of potential, but it's got to manage its debt. CoreWeave is one of those that's in that secular type of spending with NVIDIA. I think as long as NVIDIA still backs CoreWeave, we're a big player with CoreWeave, but we're keeping a very close eye on it, and that's where Nebius comes in.
The only name I don't know is SIDU. I've seen it come across the ticker, and I love the space place. So tell us about that.
Yeah, I think this is a moonshot, pun intended. You've got to realize that SpaceX is going to bring a lot of momentum to space in general. That, along with Rocket Lab, may be a good place to put some money for our clients that are looking for optimism and okay with, clearly, some volatility that will come with that. Buying those names on the dip present a good opportunity.
A couple of weeks ago, INQ had some great developments, and the quantum names have come back big time. But a lot of pundits say, hey, they're still not ready for prime time. So, but why be in the stock now?
Yeah, you trade that stock. That's a trading stock for us. We like buying it at the support and then, of course, trading it, trimming it, if you will, at the resistance. I think names like this and the quantum, clearly, whenever they break out, they're going to go big. But taking opportunity in that volatility and doing trading inside of those names, it makes you a lot of money. And
before I let you go, Microsoft and Google or Alphabet. So anyway, Ackman sells all of his Google to buy Microsoft, which felt counterintuitive, but software names are coming back. Really, the stealth move is becoming less stealthy.
They are coming back. You've got to own leadership here. You have got to continue to own these names. As long as NVIDIA stays strong, AI demand stays strong, names like this are going to benefit Google, Amazon, Microsoft. I think even Apple here is a good, strong name to hold as a core in your earning, in your portfolio.
Great stuff, Dale. You've been killing it, my man.
Thank you, sir.
Good seeing you.
All right, there you go. That particular clip tells you everything you need to know about our message going into the end of the year. We are tight on time, so I've got at least 2 more clips I want to play for you. A lot of the same stuff here, and the reality is if you are not understanding what you own and how it will work or behave in a down market, you need to call our team, 270-600-PLAN. We can help you maintain that discipline and begin working on a plan designed to help get you to the retirement you've always imagined while worrying less about running out of money in retirement. It's exactly what we do here at RDS Wealth. All right, we're going to take a 30-second break. When we come back, more Retirement Matters right after this.
You're listening to the Retirement Matters Show with Dale Smothers. Dale is the founder and president of R.D. Smothers Wealth Management. We specialize in building retirement plans that allow you to walk away from the worry of running out of money. If you'd like to chat with a member of our team, you can do so absolutely free by calling 270-600-PLAN. That's 270-600-PLAN. Visit us online at rdswealth.com and be sure to sign up for our free weekly newsletter.
All right, welcome back to the show. We've got a limited amount of time, but I want to play for you a clip that we did recently with New York Stock Exchange TV, where we were giving much of the same message. This NYSE TV interview was all around market conditions and how we are positioning our portfolios that we manage for clients. Here it is, without further ado.
We begin with the markets, and joining me now to talk said markets is Dale Smothers, CEO and President at RDS Wealth. Dale, first and foremost, thanks so much for joining us this morning.
Yeah, absolutely. Good to be here, Lance.
So we understand that you believe we're on the path to 8,000 for the S&P 500 before the end of the year. So tell me, if you can line it up, how do we get there?
Yeah, so we get there very roughly. I think there's going to be a lot of rocks in the road, a lot of speed bumps, if you will. One of them, clearly, oil. The oil crisis that continues to extend deeper into the year than anyone would have wished is likely what's going to cause this turbulence along the way. Not to mention the fact that Far East, we could see some turbulence geopolitically as well. And then we've got still got some concerns around Cuba and Latin America and the whole 9 yards. I was actually on the floor just a few minutes ago talking to an analyst that's expert in Latin America. And we begin to talk about Cuba and all the things that it could pose in terms of a pause, if you will, to the market's optimism. And this optimism, Lance, is built around AI, artificial intelligence, and that is the path that gets us to 8,000 by the end of the year. The S&P 500 continuing to see growth, demand for AI, growth in earnings, expanded margins. Those things are going to drive this market higher, but we've got to be sure to be okay with this turbulence that's coming, because I think it is here and it is here to stay. It's the price of admission, if you will.
Absolutely. And so you mentioned the AI, but you also mentioned as well a lot of potential challenges, right? You mentioned the Middle East, you mentioned oil, you mentioned Latin America. So with all that uncertainty, I guess what makes you certain that we can get there?
Yeah, sure. So certainty is probably not the word I would use. It is cautiously optimistic, if you will. And I think that 8,000 comes on the backs of these mega cap companies that continue to spend. Now, clearly, back in October, November of last year, spending CapEx on AI was punished. Now it's exactly what pulled us out of this most recent drop in the S&P 500. And when we think about an investor, our message is clear. Be disciplined, know what you own, own leadership here. Lean into those names like NVIDIA and Apple and Amazon and Microsoft. We like those names as a core holding and taking advantage of some of these dips that will certainly come, buying those names along with other names that are helping those leadership names achieve what they desire in AI. Again, 8,000 at the S&P 500 is probably an optimistic viewpoint, but it is certainly our base case on what the S&P 500 turns into this year.
So Kevin Warsh will be sworn in as Fed chair on Friday, but before then we'll get the Fed minutes tomorrow. What will investors be looking for when it comes to the Fed's path on interest rates? Because we've seen it sort of go up and down, the data tells us.
Sure. Yeah, at the start of the year, a cut was possible. Now they're pricing in interest rate hikes. I don't think an interest rate hike is realistic at all. I think that oil is a short-lived blip, if you will. Now, if we go into the end of summer and we still see oil at $100 plus a barrel of oil, now we've got to really start paying attention to Fed minutes around inflation. But this particular meeting, I think that a lot of what's about to be said is going to be noise and only noise, because as Kevin Warsh takes office and takes control, if you will, of this seat, you're going to see a new regime, and that regime wants to cut. I think he's made it very clear. Now, granted, he can't cut into this environment. I can't see that ever coming in the next, say, 2 to 3 meetings. I would be very shocked unless Middle East clears up and the price of oil does come back down to $60 or $70 a barrel of oil, which is a possibility. Sure. But if that doesn't come to fruition, I don't see cuts on the horizon. Also, because of this new administration, don't see a rate hike on the horizon either.
So something certainly to watch. Dale Smothers, CEO and president at RDS Wealth. Dale, thanks so much for joining us this Tuesday morning.
Good to be with you, Lance.
All right, so there you go. This is our message. We know that the market is presenting an opportunity right now to make some money, but you have to be careful in this market. And we are here to help you build the retirement you've always imagined. Helping you pick the right stocks is one major piece of what we do, but also helping you manage that income, helping you make decisions on Social Security, Medicare, taxes, legacy. All of this goes into a true retirement plan, and our team is here to help. If you need any assistance on that, 270-600-PLAN, or navigate to our website, rdswealth.com, and we can help you today. We're going to take a quick 30-second break. We're coming back with one final clip from our time with Stuart Varney on Fox Business, and you do not want to miss this, especially if you're close to retirement. We're coming back with more Retirement Matters right after this.
Thank you for listening to Retirement Matters, presented by R.D. Smothers Wealth Management. If you'd like to speak with us, give us a call at 270-600-PLAN. And if you enjoy the information in this show and would like to hear more, you can access previous shows by searching for the Retirement Matters podcast on the podcast platform of your choice. We also produce a weekly newsletter. Receive it free to your email inbox by signing up online at rdswealth.com.
All right, we're going straight to this clip where I got to sit down with Stuart Varney and discuss current markets and investment philosophies that we're using for our clients on Fox Business. Here is a brief piece of that TV interview.
It's kind of a mixed picture now. The Nasdaq's up 100, but the Dow is down just a little, 43 points lower. Lower. Dale Smothers joining me now to figure out what's going on with this market. I've been reading your stuff, and you think that the S&P 500 could hit 8,000 by year end. It's currently 73. That's a big jump.
Yeah, big jump. And here's the thing. We've got to be able to tell viewers that 8,000 is possible. I do think that we're on this road to 8,000, but there are a lot of speed bumps along the way. And this is why it takes ownership with conviction and understanding of what you own. If you don't understand what you own, you're going to be scared out of this market. There are dips coming. And, Stuart, this is another one right here. Oil staying at over $100 a barrel for very much longer is going to cause inflation to be sticky, and that's not going to help anyone. So that could make a major speed bump on the road to 8,000, but I think we're headed that direction.
But if you get it anywhere near 8,000, you look back over this year, last year, year before, you've had a massive stock market rally.
Massive stock market rally.
3-4 years. Never seen anything like that before.
And this is why we are talking to the clients that we serve about being very, very intentional about what you own. Have discipline here, and don't go chasing returns, because there is an opportunity of a lifetime that we face right now to make serious money with this market. But if you're not careful, you'll start chasing returns. You'll overextend on risk, and you'll find yourself losing more money perhaps than you're making in these dips when you get scared and sell at the bottom.
You're a youngster. You can afford to say things like that. If I make a serious mistake, I'm
This is it. We serve clients in that exact same space, and you've got to have stability there.
All right, good man. Thanks very much indeed. Dale Smothers, good stuff. Still ahead. New York City.
All right, and just like that, that is the end of the show. I've got to re-stress this to you. If you have heard today's show, you've heard one message over and over again. Be disciplined in this market. There's a lot of money to be made, but there's also money that can be lost very quickly if you make the wrong choices. We would love an opportunity to help you do that. Our entire team is standing by to assist you in building the retirement investment plan, income plan, tax plan, healthcare plan, and legacy plan designed to help navigate through retirement successfully, and it's personalized to you. That's something you can't get everywhere. We build it just for you. Again, 270-600-PLAN or navigate to our website, rdswealth.com. Set up your time to talk today. Until we talk again, whether it is in person or it is right here on our same station next week, always remember, save money, plan well, and live happy in retirement. God bless.
Investing involves a risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. R.D. Smothers Wealth Management is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by R.D. Smothers Wealth Management.